Hi, welcome back to our law on income taxation discussion. So now we will start with fringe benefits tax as we have already discussed about gross income and exclusions last time. So we'll start with fringe benefits tax. A. Exclusions. By way of exception, the following benefits are not subject to final income tax. Those received by R&F employees. The fringe benefit is necessary for business. The fringe benefit is for the convenience or advantage of the employer. And if the fringe benefit is exempted from income tax under the code. Employer contributions to employee retirement, insurance, and hospitalization benefit plans. De minimis, de minimis or de minimi benefits which are limited to facilities or privileges furnished or offered by an employer to his employees that are relatively small value and are given as a means of promoting health, goodwill, contentment, or efficiency of his employees. What are the inclusions? Fringe benefit is any good, service, or other benefit furnished or granted in cash or in kind by an employer to an individual employee, such as but not limited to number one, housing, except those which are provided in RR 3-98 that a housing unit situated inside or adjacent to the premises of a business within a maximum of 50 meters shall not be considered as a taxable fringe benefit. Number two, yung temporary housing for an employee who stays in the housing unit for 3 months or less shall not be considered a taxable fringe benefit. Okay. Number two ay expense account. This refers to those incurred by the managerial worker which are to be reimbursed by the management. Number three, vehicles of any kind. 4. Household personnel such as maid, driver, and others. Number 5. Interest on loans at less than prevailing market rate to the extent of the difference between the market rate and actual rate granted. Next ay membership fees, dues and other expenses borne by the employer for the employee in social and athletic clubs or other similar organizations. Expenses for foreign travel, holiday and vacation expenses, educational assistance to the employee or his dependents, and life or health insurance and other non-life insurance premiums in excess of GSIS and SSS. So how do we compute the fringe benefit tax? The final withholding tax on fringe benefit shall be computed based on the taxable grossed up monetary value multiplied by the applicable tax rate. So the grossed up monetary value is the grossed up monetary value of the fringe benefit shall be determined by dividing the monetary value of the fringe benefit as provided for in Revenue Regulations number 3-98 as amended by the Revenue Regulations 5-2011 by the percentage divisor in accordance with the following schedule. In general, for citizen, resident alien, and non-resident alien engaged in trade or business in the Philippines, the rate is 68%. For non-resident alien not engaged in trade or business in the Philippines, the rate is 75%. For alien or Filipino individuals employed by foreign petroleum service contractors or subcontractors, offshore banking units, and regional or area headquarters and regional operating headquarters of multinational companies occupying executive or managerial and technical positions, the rate is 85%. You have to take note that employees in special economic zones, including Clark Special Economic Zone and Subic Economic and Free Trade Zone, are subject to the applicable divisor as herein provided. The applicable tax rates. The fringe benefit tax shall be imposed at the following rates. In general, the rate is 32%. For non-resident alien individual who is not engaged in trade or business in the Philippines, the rate is 25%. For alien or Filipino individuals employed by foreign petroleum service contractors, subcontractors, offshore banking units, and regional or area headquarters and regional operating headquarters of multinational companies occupying executive or managerial and technical positions, the rate is 15%. You also have to take note that employees in special economic zones, including Clark Special Economic Zone, and Subic, Special Economic and Free Trade Zone, subject to the normal rate of fringe benefit tax or the special rates of 25% or 15% as herein provided. Okay, so ito ang sample computation of fringe benefit tax. So the question is, VQA company, a domestic employer or company, granted Mr. Santos, a Filipino branch manager employee, in addition to his basic salaries, 4,000 pesos cash per quarter for his personal membership fees at Astro Gym, a fitness and athletic club. How much is the fringe benefit tax that VQA company should withhold and remit to BIR per quarter? So this is how you compute the fringe benefit tax. So the answer is, the monetary value of fringe benefit tax is 4,000 pesos. The percentage divisor applicable is 68%. The fringe benefit tax rate is 32%. Hence, monetary value of fringe benefit of 68%, okay, over 68% times 32%. So 44,000 pesos divided by 68% is equal to 5,882.35. Multiplied by 32%, the fringe benefit tax then that should be applied quarterly by VQA company is 1,882.35. So, yun yung kailangang i-withhold at i-remit sa BIR per quarter ni VQA company. Saan natin nakuha yung values, yung divisor applicable, at saka yung fringe benefit tax rate? Dito yun. Yan. Okay? Pati yung kanina. Ito yung sa divisor. Okay. Yan, 68% dahil citizen siya. Okay. So, next. How do you file the fringe benefit tax return? So, the following are the information and guidelines you need to know in filing fringe benefit tax return with the Bureau of Internal Revenue or the BIR. So, what is the form, BIR form used to file fringe benefit tax? So, you have to use BIR form number 1603, which is a quarterly remittance return of final income taxes withheld on fringe benefits paid to employees other than rank and file. So, who are required to file? Every withholding agent or payer who is either an individual or non-individual required to deduct and withhold taxes on fringe benefits furnished to employees other than rank and file employees are subject to final withholding tax. So, what are the procedures in filing the BIR Form 1603? First, you have to read the instructions indicated in the tax return. Second is you have to accomplish the BIR Form 1603 in triplicate copies. So, for you to familiarize yourself sa BIR Form 1603, it would be better for you to Google it. You have to research about this particular form of the BIR. You can go to www.bir.com.gov.ph ata. I'm not quite sure about that, but you can always Google it or download the form for you to familiarize yourself dito sa form na to. So, if there is tax required to be remitted, ito yung mga kailangan nyong tignan ha. Read the instructions, accomplish PIR Form 1603 in triplicate copies if there is a tax required to be remitted. So proceed to the nearest authorized agent bank of the Revenue District Office where you are registered or tax payer considered is registered and present the duly accomplished PIR Form 1603 together with the required attachments and your payment. In places where there are no authorized agent banks, you have to proceed to the Revenue Collection Officer or duly authorized city or municipal treasurer located with the Revenue District Office where you are registered or taxpayer concerned is registered and present the duly accomplished PIR Form number 1603 together with the required attachments and your payment. You have to receive your copy of the duly stamped and validated form from the teller of the authorized agent banks or the revenue collection officer, duly authorized city, or the municipal treasurer. So if there is no tax required to be remitted, you have to proceed to the RDO where you are registered or taxpayer concerned is registered and present the duly accomplished BIR number 1603 together with the required attachments. You have to receive your copy of the duly stamped and validated form from the RDO representative. So, the deadline for the filing and payment via electronic, yung EFPS, on or before the 15th day of the month following the end of the calendar quarter in which the fringe benefits were granted to the recipient. For manual filing and payment, on or before the 10th day of the month following the end of the calendar quarter in which the fringe benefits were granted to the recipient. What are the allowable deductions? So this provision is applicable only to net income since it is only income tax which allows deductions. Okay. Ito, allowable deductions sa income para ma-generate nyo yung magiging taxable income. So, deductions are allowed because they are necessary to generate income. Pure compensation earners are not allowed under Section 34 for any deduction. The exception is for premium paid for health and or hospitalization insurance. The following deductions are allowed for a taxpayer under the net income tax. Okay, so pag nag-graduate na kayo and nagtrabaho kayo or nagtayo kayo ng business, it is very important for you to know the following allowable deductions para lumiit yung taxable income. Ito yung goal natin every time na nagfa-file tayo ng income tax return, whether annual or quarterly. Dahil pag malaki yung taxable income, malaki yung tax. Pag mas maliit yung taxable income, mas maliit yung tax. And paano liliit yung taxable income? By including the allowable deductions. Ito yung mga imemenos nyo, yung mga gastos nyo sa business nyo or sa trabaho nyo doon sa income generated nyo. Okay? So, expenses, ordinary and necessary trade, business, or professional expenses. In general, the requirements are the expenses are incurred within the taxable year. These are ordinary and necessary, and the expenses are incurred pursuant to the trade or business or the exercise of profession. This should be supported by evidence. So, lahat ng resibo na meron kayo or yung mga contract entered into, kailangan itago nyo yun dahil at the end of the year, when you file your income tax return and you include these deductions should always be accompanied by or supported with evidence. So, kailangan nyo ng mga resibo, tandaan yan. A reasonable wage and salary, other forms of compensation for personal services actually rendered, and the grossed up monetary value of fringe benefits provided the final income tax thereof has been paid. A reasonable allowance for travel expenses here and abroad while away from home in the pursuit of trade, business, or profession, and a reasonable allowance for rentals and or other payments which are required as a condition for the continued use or possession for purpose of trade, business, or profession of property to which the taxpayer has not taken or is not taking title or in which he has no equity other than a lessee, user, or possessor. A reasonable allowance for entertainment, amusement, and recreation expenses during the taxable year that are directly connected to the development, management, and operation of the trade, business, or profession of the taxpayer. The following are the conditions for an expense to be deductible. Number 1, the expense must be ordinary and necessary. Number 2, it must be paid or incurred within the taxable year. So, if you're filing for 2020 income tax return, lahat dapat ng mga deductions na isasama mo and expenses dapat incurred during 2020, not during the previous years. And lastly, it must be paid or incurred while carrying out on a trade or business. So, you have to take note that bribes, kickbacks, and other similar payments are not ordinary and necessary to the trade, business, or profession of the taxpayer. Therefore, they are not deductible. So, expenses allowable to private educational institutions. Ano tong mga allowable deductions na to? To deduct expenditures otherwise considered as capital outlays of depreciable assets incurred during a taxable year for the expansion of school facilities or to deduct allowance for depreciation thereof. The NIRC expressly prohibits the deduction of any amount paid out for new buildings or for permanent improvements or betterments made to increase the value of any property, any amount expended in restoring property or in making good the exhaustion thereof for which an allowance is or has been made. B. Interest. So, the amount of interest paid and incurred by the taxpayer within the taxable year shall be allowed as a deduction from gross income. Interest expense to be deducted is limited by the proviso which provides that the allowable deduction shall be reduced by 42% of the interest income which was previously subjected to final income tax. Allowable deductions. By way of exception, the NIRC enumerated several instances where the interest expenses incurred by a taxpayer is allowed as a deduction, but such is subject to qualifications. Letter A. If within the taxable year, an individual taxpayer reporting income on the cash basis incurs an indebtedness on an interest paid in advance through discount or otherwise provided, that such interest shall be allowed as a deduction in the year the indebtedness is paid, and that if the indebtedness is payable in periodic amortizations, the amount of interest which corresponds to the amount of the principal amortized or paid during the taxable year shall be allowed as deduction in such taxable year. So, if both the taxpayer and the person to whom payment has been made or is to be made are persons specified under Section 36, Paragraph B, and the interest expense may be treated as part of the value of the property acquired, which property will be treated as a capital expenditure, which is subject to the allowance for depreciation. Letter C. Taxes. There are two ways to minimize a taxpayer's liability. Number 1 is tax deductions, and number 2, tax credits. Okay, you have to know the difference between tax deductions and tax credits. So, tax deductions are deducted from gross income, and tax credits, on the other hand, are deducted from the income tax due. So, the formula is here. Gross income less deductions equals net income multiplied by the tax rate less tax credits is equal to net income tax payable. So, the taxes paid are incurred by a taxpayer during the taxable year in connection with his trade or business shall be allowed as deduction, except income tax and income taxes imposed by authority of any foreign country, but this deduction shall be allowed in the case of taxpayer who does not signify in his return his desire or to have any extent of the benefits of Section 34, Paragraph C, subparagraph 3. So, the tax credits for taxes paid or incurred in any foreign country should not exceed the taxes from which the tax credit is taken. Said tax should be compared with the tax to be paid in the Philippines by the taxpayer, and such credit should not exceed the amount of tax to be paid in the Philippines. Estate and donors taxes. Taxes assessed against local benefits of a kind tending to increase the value of the property assessed. Letter D, losses. Losses may be deducted from the gross income provided the following requisites are present. So the losses are actually sustained during the taxable year. Said losses are not compensated for by insurance or other forms of indemnity, and losses must be incurred from the exercise of business or from property connected with the business or profession. Loss shall not be allowed as deduction if such loss has been claimed as a deduction for estate tax purposes in the estate tax return. You also need to know about the NOLCO rule, which we tackled before pa, because this rule provides that the net operating loss of the business for the taxable year preceding the current taxable year can be carried over as a deduction from the gross income for the next 3 consecutive years immediately following the year the loss was incurred. For mining companies, net operating loss incurred during the first 10 years may be carried over as a deduction from taxable income for the next 5 years. These are not allowed if there was substantial change in ownership of the business for corporations. So, letter E, bad debts. What do we mean by the bad debts? So, bad debts result from the unpaid receivables of the taxpayers from its customers in the exercise of its trade, business, or profession. This can be deducted and charged off within the taxable year, except in the following instances. Number 1, those which are not connected with the profession, trade, or business of the taxpayer. And number 2, those between related parties. Let's go now to tax benefit rule. What do we mean by tax benefit rule? The rule provides that where the creditor was allowed a deduction of bad debts, but said debts are subsequently recovered, the previous deduction will not be cancelled, but the recovered amount will be added in the computation of the gross income. Okay, so kung yung bad debts na singil mo later on, hindi ika-cancel yung deduction na binigay sa'yo before. But rather, yung nasingil mo, na utang ng client mo, kailangan mo idagdag sa computation ng gross income mo. Letter F, depreciation. Depreciation is the expense which can be deducted by the taxpayer for several years as the case may be. This deduction is an exception to the rule that expenses to be deducted should have been incurred during the taxable year. Number 1, incurred due to the ordinary exhaustion, wear and tear, including allowance for obsolescence of property used in business. Number 2, since the property is used for more than a year, it is only reasonable that the expense be spread over the usual life of the property. Every property can be subject to depreciation except land. Bakit? Dahil ang lupa, instead na mag-depreciate, nag-appreciate yan. So, the method of depreciation allowed under the NIRCR, the straight line method, declining balance method, sum of the year's digit method, and any other method prescribed by the DOF and BIR. G, depletion of oil and gas wells and mines. So, a reasonable allowance for depletion or amortization is allowed as deduction from gross income in accordance with the cost depletion method. The provision is not self-executing. This needs approval of the BIR and the DOF. H, charitable and other contributions. This deduction is deducted from the net income, not from the gross income, since one of the bases of the amount to be deducted is a percentage of the net income. Who is entitled to claim the deduction for charitable contributions? The donor is the one entitled to this deduction, since obviously he was the one who incurred the expense. A pure compensation earner cannot claim this deduction. There are two types of deduction. We have partial deduction, which may be claimed if the donee is any of the following: a GOP, accredited domestic corporations or associations organized and operated exclusively for religious, charitable, scientific, youth, and sports development, cultural, or educational purposes, or for the rehab of veterans. The social welfare institutions, NGOs, deduction should not exceed 10% of the taxable income for individuals and should not exceed 5% of its taxable income for corporations. Full deduction. GOP exclusively to finance undertakings in educations, health, youth, and sports development, human settlements, science and culture, and in economic development. Foreign institutions or international organizations in compliance with treaties, agreements, or special laws. We also have NGOs accredited by the government certifying body. You have research and development. Generally, expenses incurred for R&D are treated as ordinary and necessary expenses, which are not chargeable to the capital account. These expenses can only be allowed and claimed during the taxable year when such expenses are incurred or paid. R&D expenses can be treated as deferred expenses over a period of 60 months. Those incurred in connection with a business or profession, those not treated as expenses under Section 34, Paragraph I, Subparagraph L, and those chargeable to the capital account but not chargeable of a property of a character which is subject to depreciation or depletion. This deduction is not allowed for any acquisition or improvement of land except for private educational institutions in case of school expansion, and expenditure related to ascertaining the existence, location, extent, or quality of mineral or oil deposits. So, pension trusts. The deduction refers to the reasonable amount transferred or paid by the employer into the pension trust of the employees, and the following are the prerequisites. It should not have been previously allowed as a deduction. It should be apportioned in equal parts over a period of 10 consecutive years. Optional standard deduction as amended by RA 5904. Individual and corporate taxpayers, instead of availing of the itemized deductions, can claim a deduction in an amount not exceeding 40% of their gross income. Once this option is chosen, this will be irrevocable for the taxable year. Note that an NRA and ETB is excluded since his liability is by way of the gross income tax where deductions are not allowed. So NRA and ETB are non-resident aliens not engaged in trade or business. So L are premium payments on health and hospitalization insurance. So this is the only deductions which can be claimed by pure compensation earner. So life insurance premium is not included as a deduction. The following are the limitations. The amount to be deducted shall not exceed 2,400 pesos per family, and then it should be allowed only if the said family has a gross income of not more than 250,000 pesos a year. And for married couple, only the spouse claiming the additional exception for dependent shall be entitled to this deduction. So before, married couple or spouses claiming an additional exemption for dependents. Ito yung applicable before, but since the train law, okay, less 250,000 pesos na ngayon sa taxable income. So what are the items which are not deductible? So these are the items which are usually not related to the trade, business, or profession of the taxpayer. You have to look at Section 26, Paragraph A. In general, the following items are not deductible. Number 1 ay personal, living, or family expenses. Number 2, any amount paid out for new buildings or for permanent improvements. Number 3, property restoration. Number 4, premiums paid on any life insurance policy covering the life of any officer or employee, and when the taxpayer is directly or indirectly a beneficiary of such policy. So losses from sale or exchange of property. Such losses are not allowed as deduction. Between members of the family, between an individual and corporation, more than 50% in value is owned by or for such individual. Between two related corporations, more than 50% of each is owned by the same individual. And between a grantor and a fiduciary of any trust, and between a fiduciary of a trust and a beneficiary of such trust. For number 4 to 6, the law presumes irregularity. So, the determination of amount and recognition of gain or loss. They shall be applicable to the income tax only since it is the only tax where the determination of gain or loss is material. So, the computation of gain or loss. For this purpose, the amount realized from the sale or other disposition of the property is defined as the sum of money received plus the fair market value of the property received. You have to take note that with respect to personal property, the gain or loss should always be determined since any gain or loss from the sale of such property is subject to the net income tax except the gain from sale of shares not traded, which is a capital asset and which is subject to final income tax. As regards real property, determine first whether the property is a capital asset or not. If it is a capital asset, the gain or loss is immaterial since the basis of the tax is the fair market value or the assessed value of the property. The sale is subject to final income tax. If the property is an ordinary asset, then the gain or loss is material since it is subject to net income tax. Okay, so the basis of determining gain or loss. The following are the rules to be considered. If the property was acquired by purchase, then the acquisition cost shall be the basis of determining the gain or loss. Cost is equal to purchase price plus expenses. If acquired through inheritance, the cost of the time of acquisition should be determined. If acquired by gift, the basis shall be the same as if the property was in the hands of the donor who did not acquire the property by gift. Thus, the basis may either be acquisition cost or the fair market value at the time of acquisition. If the property was acquired for less than adequate consideration, the basis is the amount paid by the transferee for the property. For exchange of property, as a rule, the entire amount of the gain or loss shall be recognized subject to the following exceptions under Section 40, Paragraph C. It is a contract if contract of exchange, the parties are parties to the merger and consolidation. The subject matter is the one specifically provided by law, and the basic elements in order for the gain to be not taxable and loss not deductible are: the parties are not members of a merger or consolidation. The property is given in exchange of stocks. If cash is given, this is not applicable. And after the exchange, said giver, alone or together with others not exceeding 4, gains control over the corporation.